making the time for this outside of the normal cadence. I know we're meeting in a couple of weeks, but as I mentioned on, well, actually, let's do call to order um, to the meeting. Again, we have a quorum, so we're good there. Um, any comments or concerns regarding the meeting agenda? Okay, hearing none. Let's move right into the new business, which is what I was about to speak about. So the at our last meeting, you may recall I had shared how NASBA and many other state boards have been spending a lot of time focused on this interpretation by the AICPA around alternative practice structures and amendments to the professional code of conduct in respect of APS structures to kind of tighten things up a bit and address some concerns out there in terms of how these entities are organized and potential independence issues around those things. Um, and so what I had indicated, which I have done, is NASBA's encouraged many of the state boards to get connected to this initiative and respond if appropriate to any concerns you might have, or plus or minus in terms of what your views of the interpretations are, and that's because it is critically important. I mean, the I think as everyone's aware, our our regs in Connecticut, it's section 2280-15C does incorporate the AICPA Code of Conduct as being adopted by the board as our own code of professional conduct. Um, so that code and any interpretations and ethical rulings by the AICPA shall apply to all of our licensees and certificate holders. So um, the failure of anyone to comply with that code would be grounds for discipline in accordance with our general statute. And most other states also have adopted the AICPA Code of Conduct as being the one that we follow for purposes of our oversight and enforcement. So, having said that, NASBA is responding on behalf of, let's say, all the state boards based on the input they got from the state boards. But equally important, they thought, was to have state boards, to the extent you have points of view, to share those and issue commentary. And that's because sometimes volume matters. And in many cases with these exposure drafts that come out, if there's absence of any commentary, some would presume that that indicates acceptance of what's in the guidance. And so that's why NASBA has encouraged the state boards to respond separately. I've seen a number of letters by Nevada, Arkansas. I think Oklahoma came out today. Kat had shared that with me. So there are a number of state boards that are, responding to this, and I thought it'd be something important for our state board to think about adding some commentary and thoughts around this. And given my familiarity with the issue as the chair of the Regulatory Response Committee at NASBA, I'm pretty close to, the issues here and the major concerns. And so because of that, I um, offered to draft a letter for us to consider for Connecticut to respond. That's been, shared with you all. It's fairly I kept it fairly high level. These exposure drafts, in particular this one, has 18 specific questions that they ask you to respond to. Just because they're in there that way, that doesn't mean the response needs to follow what they've asked for. And so many of the state boards, including how I've drafted this current response letter, is really staying at a higher level and focusing mostly on how that the framework itself would operate in practice at our state regulatory level. And so the two themes that, I thought important to kind of highlight, where I have the most concern myself as well, is one is the complexity of the standard, which then raises questions around its enforceability and consistency of application. Um, I've was a CPA, or I'm a CPA for, almost 40 years now. And so I've got, fair amount of experience, reviewing standards and applying those. And to be quite candid, when I've read through this the first time, the second time, the third time, the fourth time, it's you shouldn't have to read something that often to really try to understand what they're asking for and what they're proposing, within the standard. So for me, um, as well as some others, and I know NASBA's commenting on this as well, they thought the complexity around this was going to make it very difficult for um, state boards to maybe understand and apply it consistently, in terms of our oversight role. Users, CPAs, firms, understanding what they need to do to comply with standards, peer review and their ability um, to really assess this consistently among, by firm and engagement by engagement. So there were concerns around complexity and enforceability that I thought would be something high, again, high enough level to then recommend that the ASCPA go back and do what they can to streamline the language, give better examples. There's diagrams within this exposure draft that very, very complicated, at least when I read them. So do what they can to simplify this if they're going to move forward with some of this guidance. Um, the second point was just more around how much of the standard is focused on form, and the structural relationships, that the investor has with the non-attest entity and the attest firm. And there seemed to be less than appropriate um, attention given to independence of appearance and issues around that. And so um, the second comment is really focused on how perception is equally important to appearance and fact, and the recommendation that more emphasis be given on appearance, addressing and possibly including safeguards uh, within and prohibitions of certain relationships that could create threats to independence. Um, and then ultimately, you'll see the letter just encourages the uh, uh, the peak, who's responsible for the ED, just to continue to have dialogue with the state boards and other relevant stakeholders to make sure that whatever they come out with is practical. Um, and again, and allow us to do the job we need to do in terms of oversight. So you've all had a chance to read the letter. The other thing I'll just share with you too is, there's some other, very technical issues also within this that NASBA's choosing to respond to. So in addition to independence and appearance and regulatory oversight, their comments have focused on, um, there's a concept of uh, a threshold that would need that if it's were to have been passed around, there'd be independence issues based on whether an investor has either control, or they refer to significant influence and an investment being material to an investor. NASBA has proposed that, the concept of end is inappropriate because, for many of these private equity companies that make investments, there's probably not many of their investments individually that are material. And so the thought was, this issue would not be tripped for them. So the suggestion was to use the word or So if there was significant influence by the investor over the APS entity, or if it were material that they would fall into this guidance and have to comply with these independence rules. Another one had to do with where the non-attest entity is permitted to determine compensation over the attest partners in the attest entity. And the concern around that is that there could be undue influence that creates pressure that could impact audit judgments and conclusions, willingness to challenge management, decisions around accepting, continuing, or withdrawing from engagements. And so the attest partners themselves, if their compensation is determined by the non-attest entity, they could have influence over what the attest partner is doing within their own entity and their own professional responsibilities that would not be appropriate. And the final two were the proposed revisions draw distinction between financial statement audits and reviews and any other forms of assurance engagements. And so there was a thought that independence is independence. And so, why would you carve out other assurance engagements from, the typical financial statement assurance and reviews? So the comment was it should be consistent across all assurance and attest engagements. And the last comment was there's currently no requirement to monitor relationships and circumstances that create threats to independence. So the way the standard's currently written, the assessment around independence would be made at a point in time. But as relationships change, maybe agreements among those entities change, there's currently nothing that would say you need to remain aware of what those changes are, monitor those, and then maybe revisit your independence conclusions in light of those. And so the recommendation was you really should be required to evaluate those on a regular basis. So those are, again, just sharing more generally what NASBA is going to comment on. Again, I think for purposes of, Connecticut and what some of the other boards are doing, I see that many are more focused on just calling out complexity, it's not as straightforward as it could or should be to make it practical for implementation and use for our purposes or even for the CPAs. And the issues around independence are the two. So with that, curious if any others have thoughts on the letter, anything that you've may have read or seen or heard about within the interpretation itself that causes you concern that you think we should add to the letter or not. Just want to open it up to the board to get your thoughts on what's being proposed here, and then ultimately, if the board believes appropriate, that we'd look to respond. I would ask that someone ultimately make a motion to either adopt this for a formal response or not, if people don't feel that that's appropriate at this point. So I will open the floor up to anyone who has any concerns, comments.
I think the letter's good, Tim. I mean, I don't know. I don't know if you could go point by point answering those 18 questions. You'd spend I don't know.
I also think that, go ahead.
I was just, if you have to read it 4 or 5 times and you're still not 100% sure what the heck they're talking about, I think that's kind of an indicator.
I also think addressing 18 points would send the impression that we thought having 18 points was reasonable, which I don't think it is. I mean, I think it's got to be simple. I think it's got to be as you point out, easily understood. And I'm just going to admit my own bias that I'm extremely skeptical of non-CPAs in investing in accounting firms. So if it's going to happen, I think it's got to be easily understood and not some black box that the public and users of CPA services aren't going to understand.
Yeah, and to that point, Robert, the horse has left the barn, right? These
No, I know,
APSs,
I know.
they've been out there a while, but I guess the point is the profession's now just trying to make sure that they're living by the rules that they should be living by. And I think there's a good attempt to amend the independence rules to make sure you're addressing the uniqueness of these structures because it's not our statutes weren't written to deal with APS structures. It's with firm ownership, and they're the licensed entity, and that's how we've been regulating. And so I think some guidance is needed, but I think something
I,
simpler would be better. Hi, Stacy.
hi. I did want to just comment on what you said about the alternative practice structures and the folks from the ones that determine compensation
Sure.
and impacting the audit, because that did happen to me where I had a client situation and the tax person was had the relationship with the CEO
Hmm.
and was pressuring me on the audit side
Hmm.
when we brought up going concern issues, when we brought up potential goodwill impairment, and it got elevated to the regional boss because she was kind of meddling, and it became a major issue, and I felt like I got kind of like bullied by that person. Um, and I had reached out to my QC partner because they were looking to do some additional work, and the tax person was getting involved again. Should we have a planning meeting and all this stuff? And I raised it to my QC partner and said, should she be involved in this at this point? And it blew up again. So, it was not a good situation. And she was like, don't forget, I'm on the management committee when the management committee determined comp. And
Hmm.
so my QC partner was like, are you threatening me? Like, I know you're on the management committee. So I definitely think there needs to be something in place to prevent that from happening.
Yeah. Yeah, and that's again, they're the five key thoughts and points. NASPA is responding to all the 18 letters, but before that, it's like, let us tell you what we really feel about this. And there are five categories, and one they hit on pretty heavily is this non-attest entity um, being permitted to determine the comp of the attest, because to your point, that's exactly what was happening, right?
Yeah, yeah. And I think it's
Well,
still happening.
So obviously, what's currently in the standard doesn't meet the standard that we think would be appropriate to eliminate that undue influence. And so I think they need to take a fresh look at that one because it just kind of flies in the face of what you would think typical independence um, protocol would be. Any
Uh,
other? So Hare, yes, I see your,
yeah,
please.
and Stacy, thanks so much for sharing that. And I think the exposure draft, or at least parts of it, attempts to address situations like that. One of the 18 items or questions that I do think may be worth answering is, it's P. Do you agree that the proposed guidance is operational? If not, please identify specific sections you do not agree are operational. And Tim, I appreciate the preface that your intent was to keep it high level. But if I am a member, like, I don't know how they're going to take that advice or that feedback. And then, like, do you want them to simplify everything? Or like, should we specify, these sections or these pages are complex and these are okay?
Well, so here, if this thing is a bear,
Mhm.
okay. Um, if someone has the time and understanding of this thing enough to be able to respond to those as, let's say, as being more articulate around the things is, I- I'm, I think the point of this letter was to say, it is complex. We don't understand it. We think you should go back to the drawing board and simplify it. What that means, like, I personally going through this and trying to say item by item, here's what I would do to simplify it. I think it'd be difficult and impractical. So, um, again, the point of us being on the record, let's say as a board, is around, um, make sure they understand that we think in its current form, we think it needs to change to become more simple. And how what that means, that would be for them to think about.
Okay.
I would say, um, and again, I think what we focused on here, what I propose that we focus on here, is for boards that, and some have answered. I think it was the one I saw today, Oklahoma, had answered those 18 questions.
Really?
They may have the resources and the expertise to spend time to be able to address those as they should be. Um, but for purposes of our board and just being on the record, I thought something at this higher level would be more appropriate. And then uh, you will see when NASBA's letter comes out, which they've solicited input from all the state boards on specific issues. I think they're going to be more articulate around um, the things that are not operational and why. So I think they'll get that feedback. You know,
Okay.
yeah. So it's a fair point, but it's I think just given again our resources and time and collectively digging into this detail might be a little bit more than what we want to take on at this point.
And Tim, what I'm hearing is that all the sections need to be simplified. Is that correct?
I think generally speaking,
Okay.
what I've heard and through NASBA, I think there's a lot of concern within this. Yeah. Thank you. Any other thoughts or um, if not, if again, if you think there's something that's missing or there's messaging, tone wise, anything that's in this current letter you have concerns with, we can raise that now if anyone felt so compelled. If you think this is something that we do want to proceed and, again, be on the record in respect of at least these couple of points, I'd be open to entertaining a motion for us to, submit this letter to the peak on behalf of the Connecticut State Board if someone sees fit.
I so move that we submit the letter. I just want to add that I think at this stage, your letter of the sort of higher level comments is what they need because they're obviously going to have to go back to the drawing boards and we will have another chance. So I move that we send the letter as drafted.
I'll second.
Okay, motion and a second. Any discussion? Okay, all those in favor, please say aye.
Aye.
Any against? Okay, hearing none, the motion is passed. We will submit the letter.
Okay.
It's due by April 30th. There's no reason to delay. I'll probably get that out sometime today.
Okay.
Copy.
Will you
Yes,
send
sorry.
us, will you
Oh,
send us
please.
a copy of your email with the letter
I
attached,
will.
just for our
I
records?
absolutely I presume when I send the letter because there's an email address to Peak. I presume I can just copy all the board members. Would that be
Yeah. Mhm.
appropriate? Okay, I will do that. So Hare, I think you had your hand up first, and then Pete.
Sure. I just had a wondering, Tim, I had shared with you that event last week, the Legislative Forum on Private Equity in Hartford.
Mhm.
And it was a panel discussion organized by the Connecticut Citizens Action Group. And it largely focused on the negative effects of private equity on healthcare, housing, and education. And I was just wondering, this is my question to the practitioners here in this meeting. Have we noticed a change in services, in professional services in the accounting sector when it comes to alternative practice structure firms? Are clients complaining, or is that not an issue in the accounting sector?
I'll jump in and say, from a client standpoint, it's not an issue. My firm is an alternative structured firm, not driven by private equity investing. We're a publicly traded company where we have the CPA firm that does the audit work on one side, and then everything else, tax consulting, is considered a professional service firm with an agreement of utilizing staff from CBIZ advisors to work on audits for CBIZ CPAs. So our clients don't see a difference, and they've never, as long as they're being taken care of and the service that they want is being provided, then they don't have an issue with it. That's my point. That's my point of view. That's what I've seen.
Thank you for sharing.
Yeah, I mean, I would say it's not necessarily private equity driven for the service. I think it's really, the complaints I'm hearing are more just general service based, not necessarily the structure. So like I'm getting opportunities because of firms not servicing their clients, which really has nothing to do with the ownership per se.
Got it. Thank you.
Okay, thank you, Pete. I see your hand up.
Yeah, I was just curious, Tim, do you know when NASBA is gonna issue their letter?
It's going to be any day now.
Any day now.
It's got to be by
I
the
mean, the
30th.
deadline is the end of the month, is that right?
Absolutely, yeah.
Okay.
So when I guess when that come out, I'm sure I'll just confirm that NASBA, they usually they'll send a blast that will make
Okay.
you aware of it.
Aware of it.
And
Okay.
if not, I'll make sure to share that with the board
Okay.
once it's
Thank you.
out. Okay, let's see. So, all right, that's our new business and only business. Any comments or concerns of any person present today? Hearing none, I think that completes the business for the day. I entertain a motion for adjournment.
I'll make a
I
motion to
move.
adjourn.
I second.
Okay, so I think Robert, and then so here's the second. All those in favor?
Aye.
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 All right. None against, I
Bye-bye.
presume.
Thanks,
Thank
everybody.
you all again. Appreciate your time.
Thanks for doing this, Tim.
Thank you.
Bye-bye.
Bye-bye.